Good afternoon, everybody. Today is Thursday, January 20th. Welcome to Economic Matters. Today we'll be hearing three bills, HB 57, HB 125, and HB 138. We will take those in those order. Just some housekeeping or administrative notes. First, the bill sponsor, you will have just a reasonable amount of time to present your bill. After that, each witness will have 2 minutes. If you are testifying, please have your camera on. And additionally, make sure your display name is your actual name that you signed up with. So I see somebody is in here as HB 57. Please change that to your actual name. So with that, we will start with HB 57. And the bill sponsor is Vice Chair Washington.
Thank you, Mr. Chairman, as you sit currently, and congratulations to you and greetings to the members of this committee. For the record, my name is Alonzo Washington. I'm here to present on House Bill 57, as was introduced. This bill requires that an insurer uses no more than 5 territories within the state of Maryland for establishing automobile insurance rates. Additionally, we are removing language from the Maryland State Code that establishes rating factors as trade secrets, further providing additional transparency to consumers about the basis for what they are being charged. This is something that the House and Senate passed some years ago, and we want to repeal that factor to make it more transparent. Insurance companies in Maryland are not allowed to use race or income to set insurance rates, but they can use a variety of non-driving factors as proxies to that, including zip codes. I've been here multiple times in this committee to talk about the use of zip codes for insurance companies, for auto insurance companies, and we just know that as you go from place to place and move around, and we think about the single mom that moves to place, that lives in an apartment or moves from place to place, where she moves into a zip code less highly dense, but also less affluent and more minority, her driver's auto insurance skyrockets or goes up significantly as they're moving. And so what this bill does do is make sure that we're using territories instead of using zip codes, so that it's more on the basis of that region, less about the actual zip code connected to where that home is, because zip codes are more area driven and more local. With that said, I know you gave me a reasonable amount of time, Mr. Chairman, so I want to ask for this committee to move favorable on this piece of legislation. Again, it does 2 things. 1, removes the use of zip codes and changes the use of zip codes to territories. Then it also removes this requirement that says that the trade secrets that these insurance companies use can now be made public. And that's something that we recently did that seems to have not worked, because our auto insurance bills are still skyrocketing, even during a deadly pandemic. So with that said, Mr. Chairman, I ask for a favorable report of this bill, and I'll take any questions, but we do have a list of people that are here to speak that probably will answer a lot of the questions that some of your members on the committee may have.
Thank you, Mr. Vice Chair. And I think what I'll do is I'll call a couple witnesses. We'll try to do 3 or 4 in a batch, and then we can have questions. That way, not one person is put on the spot by his or herself. So we'll go to the blue corner. First up, I have favorable is Mr. Christopher Dews.
Fantastic. Good afternoon, everybody. My name is Christopher Dews, and I'm a policy advocate for the Job Opportunities Task Force, where our mission is to help lower wage workers advance to higher wage jobs. Of course, we're going to support House Bill 57 as a means of decriminalizing poverty and ensuring that auto insurance is affordable for Maryland workers and job seekers. You already know the statistics. Maryland is a very regional economy. Almost half of Marylanders drive to a different county for employment. And in lower income areas, specifically in the Baltimore region, where public transit is not necessarily as efficient, only 9% of jobs can be reached within 1 hour one way by public transit. So for economic stability, a vehicle and affordable auto insurance is necessary. And since at JOTF, our job is to get people employed, we run into this issue all the time. The Insurance Information Institute acknowledged that 14.1% of Marylanders drive uninsured. That's around 600,000 Maryland drivers, according to the MBA. And this is mostly due to the cost. They simply can't afford it. So what we are simply asking for in this piece of legislation is that we spread out the risk, as the delegate has already mentioned, and that we lower the cost specifically for lower income workers who are just trying to get to work, who just need a vehicle to get to work, take care of their kids, take care of their families, take care of medical appointments, but desperately cannot secure employment unless they have affordable auto insurance. Vehicles for Change was going to testify. I think they submitted written testimony talking about how when they get people vehicles, then they have to actually get them insurance, and that becomes the massive barrier to employment. So JLTF is looking at this from the employment angle. If we want to get people to work, if we want to, kill some of this labor shortage, people are going to have to be able to drive, and they cannot do that with the cost of insurance being horrifically inflated, thanks to the use of zip codes. So with that, I'm going to cede the rest of my time. I'm open to any questions, and thank you all for listening.
Thank you, Mr. Dews. Next, I'm going to jump down here, and I apologize. We have the Baltimore City Comptroller on here. So Comptroller Henry, you can go next if you're there.
I am. Yeah, okay. My camera is on, correct?
Yes, sir.
Okay. All right. Good afternoon, Mr. Chair and honorable committee members. My name is Bill Henry, and I'm the Comptroller for Baltimore City. I'm appearing before you this afternoon to express my full-throated support for HB 57. If enacted, this bill will require insurers to calculate automobile policy rates not only more equitably and fairly, but also with a greater degree of transparency. This in turn will likely result in lower rates for many across the state, including most of my constituents in Baltimore City, who are currently burdened with some of the highest auto insurance rates in the state of Maryland. I did want to share with the committee a personal example. Back in 1990, I got a job working for then Congressman, now U.S. Senator Ben Cardin, working in his district office. Our friend Ben paid me $18,000 a year. Because the job involved representing him at events across the district, I also had to get my first car. I bought a used 1987 Dodge Omni hatchback, powder blue, for $2,000 and financed it through GMAC. My payments were $75 a month. But the cheapest car insurance I could secure as a resident of zip code 21218, which is entirely inside Baltimore City, was $1,500 every 6 months. That was $250 a month. Every month, my state mandated auto insurance cost me as much as my rent and 3 times what the car itself cost. 4 years later, when I moved to my current home, less than a mile and a half north of where I had lived in the early 90s, but now in the 21212 zip code, which is split between Baltimore City and Baltimore County, my auto insurance premiums dropped precipitously by more than 50%. Even more troubling, both from an equity perspective and one of simple fairness, when a driver files an auto insurance claim after an accident, the claim is currently held primarily against the zip code where the accident occurred, not the zip code where the driver lives. If a driver from Howard County and a driver from Harford County get into an accident as they're both leaving an Orioles game in downtown Baltimore City, it is my constituents' insurance rates that go up. That's not fair. As Comptroller of Baltimore City, I am committed to protecting our community's financial interests, which includes ensuring equity and access to transportation. Not only would Delegate Washington's proposed legislation sharply reduce the cost of auto insurance in lower income Black and brown neighborhoods, where residents are charged nearly double what the residents of white neighborhoods are charged, regardless of their actual driving records. It would also allow all of Maryland's consumers to know what their insurance costs are actually based on. As someone who supports fair pricing and the elimination of redlining in auto insurance, I respectfully request that the committee issue a favorable report on HB 57. Thank you for your time and attention.
Thank you, Mr. Comptroller. For the members, we're going to take one more witness and then we'll open it up for questions. If you have a question, just go ahead and put your hand up on the side panel here, and then I'll take them in order as I see them. Next up, we have Miss Isadora Stern.
Hi, yes, this is Isadora Stern with the Maryland Consumer Rights Coalition. MCRC is a statewide nonprofit that advances economic inclusion and equity through research, education, direct service, and advocacy, and we are in support of HB 57. The current use of zip codes is problematic as it creates higher cost premiums for Black and Brown low-income neighborhoods and decreases costs for higher income neighborhoods. MCRC worked with the Consumer Federation of America to release a report last year that determined that auto insurance premiums decline as the diversity in a community declines and the white population grows. In the report, we found that the average premium of basic coverage decreases by $72 for each 10% increase in the proportion of white residents in a zip code. This factor is a clear indicator of race and should be eliminated in order to protect drivers from racial discrimination at auto insurance pricing. I also have a personal story about a change in address and seeing a huge decrease in the cost of my insurance. I went from a majority Black zip code, 21218, to a majority white zip code, 21211, within Baltimore City, and saw a $242 decrease, which is a 35.5% decrease for moving less than 2 miles. My driving record stayed the same. Everything else stayed the same. The only change was the change to my address. I think the craziest part is that I moved 1 city block away from my old zip code. $242 for a single city block of difference is outrageous. The use of zip code in auto insurance rating perpetuates racial and financial discrimination and should be altered in the way that this bill stipulates. Thank you for your time, and I urge a favorable report.
Thank you. First, let me just, I should have done this at the start. Welcome, Delegate Harrison. And I see that you have your hand up. And so we'll go to you first, Delegate Harrison.
Thank you. May I ask a question just for clarification of the sponsor?
Sure.
Delegate Washington, just a quick question on territories, just to make sure that I understand. So I'm just going to use myself and my address as an example. I am like 5 minutes and actually walking distance just outside of the Capitol Beltway. So the zip code that is within the Capitol Beltway falls under this discriminatory practice. So when you start talking about territories, how are the territories then defined? How will that happen? Can you explain that a little bit more to me, please?
Yeah, well, thank you, Delegate Harrison, and congratulations on your appointment to ECM.
Thank you.
No problem. You know, what we decided to do was create 5 territories instead of zip codes. And so we're hopeful that in that case, it will be used to actually lower the amount of insurance rates throughout the state. And that will be decided through the PSC and through the Public Service Commission. And so they will use a multitude of factors in how that is considered to be done, just as much as we do when redistricting and other things where we have to use some type of things. I'll be open to having a discussion about adding additional criteria, what that will look like. I know you're in the insurance industry, and so if you have any suggestions, let's talk about them, right? And have a discussion about those.
Okay, no worries. I just wanted to make sure that I understood the definition of territory.
Yep.
Delegate Walker.
Thank you, Mr. Vice Chair. I guess the question for you, Mr. Vice Chair, is the insurance company, are they going to speak in opposition to this afterward?
Yes, they are. We're going to go through the favorable, then we'll get to the unfavorable.
All right, thanks.
Delegate Watson.
Thank you, Mr. Chair. Quick question for Mr. Henry. I was curious, is he still here?
I am.
Great. When you bought that powder blue car, how old were you?
I was 22.
Okay. So you were 22 and living inside the Baltimore city lines when you, I guess that was over 20 years ago.
Over 30.
Yeah, 30 years ago. So you were quoting premiums 30 years ago for $1,500 a month in the city at age 22 and being a male, correct?
Yeah, correct.
And then the second thing.
I was also quoting that 4 years later, I was only 4 years older, but I was now quoted a insurance price of significantly less just by moving a mile and a half north.
Right, and you were 26. Could you just explain to me though, I was interested in your story about two people get into an auto accident at the stadium, and one is from the county and one is from the city, but the city person gets higher rates. Can you explain that?
I'm sorry, I kind of rushed through because I was trying to, stay as close as I could within the 2-minute limit. It was if two drivers from outside the city get into an accident in the city, the insurance companies note that accident as being an accident in the city zip code where it occurred. And therefore, when they are setting insurance rates for the people who live in that district who weren't involved in that accident, they use that accident as a justification to raise the auto insurance premiums for those residents. And that was the part that I was saying wasn't fair.
Oh, okay. So where exactly did you get that information? I just want to track down that source.
I was given that information, I think, multiple times. It wasn't from one particular source.
Okay.
If insurance companies would like to profess that they don't actually do that, it would be a lot easier to prove it if this bill were in place.
Yeah, I appreciate that. I guess when one of them testifies, hopefully they'll address that. I personally believed that the accident charge went to whoever was at fault in the accident and to their insurance rates. So
that would be good, but that's not how it's been explained to me in the past. So
okay, perfect. Yeah. Well, we'll have an opportunity to hear from them. Thank you so much for being here.
Thank you. Thank you for the opportunity.
Okay, next up, Michael DeLong.
Mr. Chair, I had my hand. I don't know why.
No, I'm sorry. Delegate Fennell.
Thank you. I had my hand up. Something's going on with my hand raised, but Isabella, is it Isabella? I think he was on.
Isadora, yes.
Yes, Isadora. Hi, Isadora.
Hi.
Now, my question to you, you said that you moved from a low area to a maybe moderate to high area, and then you noticed that your car insurance decreased when it was increased in a low area. Is that correct? Is that what I heard you say?
Yes, that's correct. I moved from a majority Black zip code and then saw a decrease when I moved to a majority white zip code.
And it decreased. How much did it decrease by?
$242. And my written testimony has screenshots of this update from my carrier Geico.
Okay, thank you. Thank you so much. Okay. Thank you, Mr. Chair.
Thank you, Delegate Fennell. Okay, next up, Michael DeLong.
Hello, this is Michael DeLong. Can you see me?
Yes.
I can, sir.
Okay, great. Thank you very much for hearing our testimony. My name is Michael DeLong. I'm here on behalf of Consumer Federation of America. We strongly support HB 57, which would promote transparency in auto insurance markets and end the use of zip codes in auto insurance pricing. It will make auto insurance more affordable and basically help consumers. Currently, Maryland requires all drivers in the state to purchase insurance. And so the legislature, you have a special responsibility to ensure that this purchase is affordable and that consumers aren't subject to unfair discrimination. But insurers use zip code to unfairly discriminate against consumers. The first part of HB 57 opens up insurance companies to the same public scrutiny that's available in a bunch of other states, and that was available in Maryland until recently. And with this information, consumers can get a better sense of what insurer is best for them. And the second element addresses the fact that the use of zip code results in extreme price variation between safe drivers solely due to their address, and people wind up paying higher premiums. We found examples where, say, someone can be charged hundreds of dollars more. In Baltimore, depending on what side of certain street you live on, your premium can jump by 80%, even if you live in a place that's very similar density-wise. And the current system of pricing using this factor, it perpetuates and reinforces systemic racism and unfair discrimination. The zip codes with the highest percentages of people of color, especially African Americans, wind up paying the highest premiums, even though they can often afford to pay less. And for all these reasons, it shouldn't be used as a factor in setting insurance rates. This bill states that insurers that use territory should use territory, and they can't use more than 5 territories. We think this is going to allow insurers to capture some of the differences in driving risks that you would find, say, on like rural areas versus city streets. but it's also going to spread the risk more broadly among the pool of Maryland drivers, creating a fairer and more accessible auto insurance market. Enacting it will substantially lower costs for many drivers who are currently struggling. So we ask that you issue a favorable report on this bill. Thank you.
Thank you. Next up, we have Tanea Moore. Ms. Moore.
Thank you, Mr. Vice Chair. Chairman Wilson.
Did I say that correctly?
Yes, you did. Tanea Moore. Thank you. Thank you for the opportunity to support House Bill 57. My name is Tanea Moore, and I'm the policy manager with the Cash Campaign of Maryland. Cash is a nonprofit that seeks to promote economic advancement for low to moderate income individuals and families in Baltimore and across the state. Cash supports this bill because it limits insurance companies' ability to adjust auto insurance rates based on the zip code of the insured or applicant. Allowing car insurance companies to use zip codes to determine rates allows for companies to charge more to low income and minority populations, which increases the cost of car ownership for these communities. It is illegal to discriminate based on race in the insurance industry. However, using zip codes to determine rates has become a proxy for race. Many customers do not know they are being penalized for living in one county over another. The customers with the highest insurance premiums also live in counties with the highest population of low-income Black workers: Baltimore City, Baltimore County, and Prince George's County, just to name a few. In my written testimony, I referenced the 2014 study from MCRC, where they examined the impact the use of zip codes can have on a person's insurance premiums. They found that a single 30-year-old man in Baltimore City pays on average more than $500 more than he would pay for the same insurance in Montgomery County. Creating additional financial barriers for low-income and minority communities to have access to affordable personal transportation weakens low-income and minority communities' connection to things such as the workforce, access to crucial services, and access to necessities. For these reasons, we urge a favorable report in House Bill 57. Thank you.
Thank you, Ms. Moore. Next up, we have Nicole Hanson Mundo.
Good afternoon. Good afternoon. Happy New Year. My name is Nicole Hanson Mundo, and I am the Executive Director of Out for Justice. I think, all of my colleagues have indicated very valid points that we have made year after year after year. And we know that in this very trying time in the last 2 years of COVID has really put a lot of restraints on families in Maryland. And if you are even honest that COVID has even imposed some constraints on you, and we just feel like this is common sense policy, right? We know that people are being treated unfairly. We know that people cannot afford the current rates of auto insurance based on race, based on their zip codes. We know that, people are now maybe making $15 an hour, right? That's $300 a month, $3,600 a year. If you only making $15 an hour with an annual salary of $30,000 annually, that's more than 12% of your income pre-taxes that goes directly to insurance. So how are you expecting individuals to feed their families, to pay for gas, to go on even a small extracurricular activity like the movies, to just meet basic needs, right? And so I think that this is a committee of smart individuals who understand the law, who study the laws that they introduce, who study the laws that they make decisions on. And this is just common sense policy. And it's more important now than ever, considering what the country is going through, that this is something that you all do. It's the right thing to do. And, you all know it's the right thing to do. You all know that people are being treated unfairly. You all know the challenges that people are facing right now in this city, in this country, and in this state. And so this just makes sense. Thank you for allowing me.
Thank you, Ms. Mundo. So that it concludes all the favorable witnesses. I see your I see your hand, Delegate Walker. So we'll go to you.
Thank you. The Walker works for me too, man. Sorry. I guess I want to ask the sponsor or somebody from that side before we move on here from the opposition. Let's suppose the opposition comes on and do you know, are they using stuff like crime in neighborhoods as a deterrent or as a factor in this?
You're asking if auto insurance is using crime as a factor?
Yeah, like in the studies that are done, and if one of your panelists knows the answer better, I'm wondering, it seems to me, I'm like, how could you do this in a zip code? Are they trying to say certain areas are more crime ridden? And is that one of the factors? And if they're saying that, then what would be, your answer to solving that?
I'm gonna ask Michael DeLong to answer that question if he could.
Hey, this is Michael DeLong from Consumer Federation of America. I am actually not super familiar with this. I will investigate and we can get back to you, but insurers use a wide variety of factors ranging from credit score to zip code to many other things. So it is quite possible that some of them could be using this as a factor, but I'm not entirely sure to what extent and which ones. We can do some research and get back to you.
All right, because I'm thinking like in your district there, Delegate Washington, like, College Park has a lot of young kids, this and that stuff happens on certain streets. And I wonder, like 3 or 4 blocks over, where they may have a change in zip code, same thing. That was one of the factors. So, but I don't cut you off, but that's what I was thinking.
Yeah, part of the thing also with this bill is that we're trying to make sure that those secrets that they have of using these factors are now public. We don't know a lot of it, right? So a lot of the things that they're doing in these factors and factoring insurance, it's all secret to us. We don't know what those are. So this bill removes that and makes it more public so we all exactly know what factors they're using. And you're right, like in the city of College Park, where there's a majority white population, but if you go over to my neighborhood in Spring Hill Lake, where the zip code just changes a block or 2 away, the insurance skyrockets, and it's 2 separate zip codes. And so that has happened and is constantly happening. You heard the stories today, even from the Comptroller of Baltimore City, that he's experienced it personally. And you heard it from other folks like Isadora, who also has experienced it personally.
Delegate Walker, if I may, this is Christopher Dews from the Job Opportunities Task Force. A part of the Consumer Federation report that was released in 2015 acknowledges that in the densest urban communities, that African-American zip codes, just to be clear, so this is the urban, communities, so cities, 60% higher for Black zip codes. In rural communities, you have 23% higher for Black zip codes in comparison to predominantly white zip codes. And then this is the thing that I want you to, kind of notice. In upper middle income, predominantly African-American zip codes, it's 194% higher. 194% higher. So it does seem to be more based on who is living there, not necessarily the crime.
Go back.
Yes, sir.
So that last one, let's say upper Black middle class, yes. 194% higher insurance rate compared to who? To their white counterparts or white upper middle class?
Yes, compared to upper middle class, predominantly white zip code. So I mean, when I read that, it does seem to be more on who is living there, not necessarily the level of crime, unless we're assuming, and this is what I think is a little dangerous, that just being Black in these certain zip codes, regardless of rural status, density, or just level of income, that there's just more crime there. And so, I mean, I guess the insurance industry would have to be able to explain that. But I would argue that it's not necessarily something rooted in crime.
Anything else, Delegate Walker?
No, thank you.
Okay, we'll now shift to the red corner, the unfavorables. First up, I have Bryson Popham.
Thank you, Mr. Chairman, members of the committee. Bryson Popham appearing today on behalf of 2 clients, the Maryland Association of Mutual Insurance Companies, which is a trade association of insurance companies that write property casualty business, including automobile, throughout Maryland, and also the insurance agents and brokers, which are the agents who represent them, appearing in opposition to House Bill 57. First of all, I guess my role in this is as an historian, Mr. Chairman. So I would first ask the committee to take a look at one of the 2 letters that I've submitted, the letter on behalf of MAMIC. It gives you some history of this issue. I have been dealing with it my entire career in Annapolis, which goes back, it precedes Mr. Henry's lengthy service. It goes back into the 80s. And we have been dealing with territorial rating ever since then. Territorial rating has been a rating factor used by the insurance industry almost universally for nearly 100 years. It's the reason some companies came into being to begin with. And if I may just address the question about how and why it's used, it is simply a method for calculating the likelihood of future losses based on past loss experience. To my knowledge, Delegate Walker, there is no examination of crime statistics that go into the territorial rating factors. But I would suggest to you and your colleagues that if you want to have that and other questions answered, you have an expert who works for you. That is the insurance commissioner and her extensive resources in her office. We would rely on her judgment in determining whether territorial rating is a factor that should be allowed to continue. And if this bill were to pass, it would simply increase rates for a large number of people, not decrease them. So with that, Mr. Chairman, I thank you for your time, and I respectfully request an unfavorable report on House Bill 57.
Thank you. Next up, Matt Overturf.
Yes, sir. Good afternoon, Mr. Vice Chairman, members of the committee. My name is Matt Overturf with the National Association of Mutual Insurance Companies. NAMIC is a national trade association comprised of 1,400 plus members, 22 of which domiciled in the state of Maryland. And NAMIC requests that the committee return an unfavorable report on House Bill 57. I echo many of the comments from my colleague, Bryson Popham. And most people would agree that you should pay a premium that relates to your specific risk. The use of territory determined by an insurer helps tell the insurer what a risk policyholder possesses. In order to accurately price premiums, insurers must determine the best degree possible in individual's risk. In closing, House Bill 57 will not lower the cost of insurance. Instead, it will likely create upward pressure on premiums. For that reason, I request the committee return an unfavorable report on House Bill 57. Thank you.
Thank you. Just a note, and I should have put this out in the beginning, the chat is for the members. So please, nobody respond or comment in the chat. Next up, we'll take three more and then we'll take questions of the unfavorable. We have Marta Harding.
Thank you, Mr. Vice Chair. Marta Harding here on behalf of State Farm, also in opposition to House Bill 57. You have our written testimony. I'm going to focus on a part of the bill that hasn't been talked about much, and that's the part that would make insurers' proprietary rating models available publicly. These are the complex mathematical formulas and algorithms that companies use to develop insurance rates that match price to risk and compete with each other in a very robust auto insurance market. Making these models publicly available would mean that competitors in the marketplace would have access to each other's rating models. It is difficult to imagine anything more destructive of a competitive market than to give competitors access to each other's pricing methodologies. This is precisely why the General Assembly acted in 2016 to clarify that these models are protected, consistent with the longstanding Maryland policy embodied in the Public Information Act that protects trade secrets and confidential commercial information. I do want to make one thing very clear because I think there's some confusion about this. The current law does not protect the factors themselves. It protects the methodologies that companies use, these algorithms that companies use to weight and prioritize the factors in a way that develops the rates. If, in other words, it protects the recipe, not the ingredients themselves. Also, to be clear, the MIA as the regulator has unrestricted access to these models in reviewing a company's rate filing. This is a question of whether the MIA has to make them public or not in response to a request. The consequences of making them public to ensure that their proprietary models don't get into the hands of competitors, companies, particularly national companies where these models could have relevance in other states, will turn to using models that are standardized and public and more of a one-size-fits-all approach that will dampen price competitiveness to the detriment of consumers. For all these reasons, and we endorse the testimony of the other witnesses on territory, and I've run out of time, so I'll just ask for an unfavorable report. Thank you very much.
Thank you. Next up, Nancy Egan.
My apologies. Sorry, I forgot to unmute. Good afternoon, Vice Chair Crosby and other members of the House Economic Matters Committee. My name is Nancy Egan. I represent the American Property Casualty Insurance Association, which is a national trade organization representing nearly 60% of the U.S. property casualty market and 59 50.9% of the private passenger auto insurance sold in Maryland. I'm going to concentrate on our opposition to the territory section of the bill. And first, I'd like to say that I am a resident of Baltimore City, and I used to own an agency in Govans writing car insurance in the city. So I'm very familiar with rating in urban areas. And I need to say that I know that we have more parking on the street. And I know that I read every day on Next Door Neighbor about folks in my area having their cars being broken into and things being stolen. And just this week, there was a post by a young mother whose car was stolen, when they went inside to get their car seat. So you had asked Delegate Walker about losses. If you make a claim for vandalism under your comprehensive, or you make a claim for your car being stolen under your comprehensive coverage, it would go into the losses for your zip code. So yes, that is a factor, but only if you made the claim. If you didn't have comprehensive coverage, you wouldn't be making that claim. So just to say that again, automobile insurance losses are generally higher in urban areas because the density of the population, more losses in that area, and of course, more exposure to such things as theft and vandalism of vehicles. We have discussed in prior years about trying to find solutions to lower the cost of automobile insurance programs. I remember just 3 years ago, the Delegate Turner had suggested a low-cost auto program, which we have never been able to get off the ground, but there's different options. The idea, and it's in my testimony, if you restrict geographical location as a primary rating factor, all it will do is shift the cost. People that are paying less will pay more, and people that are paying more will pay less. So those people in less populated communities would be required to subsidize their counterparts. And for that, excuse me, I overran the territory. Request an unfavorable report. Thank you.
Thank you. Hey, we have 2 more unfavorable witnesses, and then I got 3 hands up, and we'll get to them. So next up, Bob Enton.
Thank you very much, Mr. Chairman. Robert Enton on behalf of the American Property Casualty Insurers Association. I, like Mr. Popham, have represented the property casualty insurance industry for many, many years. And you have to take, I think, a close look at the existing Maryland law. Section 27501 of the insurance article prohibits unfair discrimination in underwriting. An insurer or insurance producer may not cancel, refuse to underwrite, or renew a risk or class of risks based wholly or partly on race, color, creed, sex, or blindness of an applicant, or for any arbitrary, capricious, or unfairly discriminatory reason. That is Maryland law. And we see these bills year after year, but I have yet to hear where any of the proponents for this legislation have gone to the Maryland Insurance Administration and raised a complaint against any of the companies that say that they are acting in an unfairly discriminatory manner, either in whole or in part. That's the current law. The other thing I would point out is the fiscal note. And when you look at the fiscal note for the bill, and I always look at the fiscal note is not written by the insurance industry. The fiscal note is written by the Maryland Insurance Administration, the source of the information, and MAIF. So when you look there, you will see the existing limitations on the use of territory, page 2 at the top, and the limits on trade secrets. The bottom of page 2 of the fiscal note also deals with that. Page 3, and I think that this is key.
Howard, can you please mute?
Sorry, page 3, I think this is key. And this is, once again, not coming from us. If this bill passed, imagine this, premiums will go down in Baltimore City and up everywhere else in the entire state of Maryland.
Mr. N, can you
everywhere else?
I'm keeping a timer here. Timer started.
Okay, well, I said this says I have 40 seconds, but I will wrap up. Thank you. We must have a different timer. The final thing that I would say is that every insurance rate has to be actuarially justified. And if it's not, make a complaint to the insurance administration, and they have the ability to set it aside. Thank you very much.
And the last witness we have is Miss Tina Quigley.
Good afternoon, Mr. Chairman, committee members. My name is Tina Quigley, and I am Legislative and Regulatory Counsel for Allstate. And I am here today in opposition to House Bill 57. My comments today will focus on the portion of the bill regarding trade secret protections of rating models. And so I want to make sure that the committee understands what Ms. Harding said earlier. The rating factors, the factors that companies use in rating are public information. They are publicly available. It's our rating models that are proprietary. But to be clear, the experts who are charged with reviewing every filing and ensuring that we are in compliance with Maryland law, which is the Maryland Insurance Administration, receives all of the information. They receive the rating factors, they look at the rating models, and they review all of that. So there's no other type of business in Maryland where that is required to make its proprietary business models open for inspection by its competitors. And that should not be the case for insurers. A lot of time and money goes into developing models to help match price to risk, providing competition in the market. Current law is important from a competitive perspective. We will not be in a position to bring innovative products to the state if you make our models open to the public. And at the end of the day, that won't benefit the marketplace or your constituents. I endorse the comments of my colleagues from NAMIC, MAMIC, State Farm, and APCIA regarding the territories. And for these reasons, and for my prior comments, I would urge that the committee give the bill an unfavorable report.
Thank you, Ms. Quigley. And I'm going to take it in order of how I saw the hands go up. So first, Delegate Chi.
Actually, I thought Delegate Walker was first. All right, then I'll just go forward. Thank you. Thank you, Mr. Chair. So in listening to the opposition voices, I'm wondering, in the industry voices, I'm wondering, because PNC insurance is only regulated at the state level, are you saying that, especially I think it was Martha's testimony, are you saying that companies doing business in multiple states will have to have unique models to that state because they are regulated state by state? You will have different models for each state. Is that correct?
Delegate, what I was saying was that if Maryland law, any state that makes these models public, and there are only a very few of them, I can get you the specific names, but there's very few states that do. In those states, and I'm speaking for State Farm, they don't use their proprietary rating models because then they're available to their competitors. What they do, there are some publicly available models that, you know, aren't any big surprise to anybody. And those are the kinds of models that they would use in any state that it would allow that. So that's what we believe would happen in Maryland, at least among companies that are particularly sensitive to making sure their information doesn't get out for all the purposes of all the other states.
Okay.
Each state, of course, has a unique, situation in their rating for the state. It's not like a national rating model in that sense, but the underlying models themselves are relevant in more than one state. So that's if that helps explain what I'm saying. It's not a nationwide rate that everybody's paying. It's state by state, but the models are relevant in multiple states, not just in one.
Okay, thank you.
Delegate Walker.
Thank you. I'm having some internet issues, so if I get cut off, I'll hop back on. I didn't hear anybody say that this doesn't happen. And that's the thing. I thought that we'd have got something like this is not happening. Nobody said it doesn't happen. And I noticed that when Mr. Eden spoke, he talked about the list of things in Maryland state law, but I don't know, did I hear location as one of those? I think you mentioned a lot of other factors, but geographic location was not one of them that you mentioned. And Ms. Egan, you talked about the crime, but I just kind of know this, that a lot of people that live in poor or distressed communities, they go break in cars in wealthy communities. Why do robbers rob banks? Because that's where the money is. So that's of concern as well. And then Marta and Ms. Tina, you guys kind of talked about, it's like a credit score. One thing we've done as a public is we've given the opportunity to teach people how to increase your credit score, how to do well. It seems like we're not coming up with a solution for this, and yet nobody actually said, no, this does not happen. And they said they've got studies that does this.
If I could, Delegate Walker, since you mentioned me, in looking at the fiscal note, makes it very clear that under current Maryland law, passenger automobile insurer in the state is authorized to use territory as a rating only if the insurer submits a statement to the insurance commissioner certifying that the territories used have been reviewed within the previous 3 years and the use of the territories is actuarially justified. So I think what that means is you have an insurance regulator. We have a very strong insurance regulator with a very strong insurance law. And if someone believes, as I said, that what we're doing is unfair, if they believe it's discriminatory in part, not in whole, but in part, or that it's not actuarially justified, that is, when you look at the statistics and the formulas, then they can file a complaint with the insurance administration. And in my 20 years of representing the insurance industry, I've never heard of one. The other thing I would point out to you is that we have 1,569 licensed automobile insurers in the state of Maryland. And that was in 2022. And one of the things that having a variety of different factors that you can consider is that different insurers give weight to different factors. But every insurer has to compete against 1,568 other insurers. And they're going to do whatever they can to bring rates down because that's what it takes to compete.
I understand that.
Limiting the factors will reduce competition.
I understand that. The insurance, we know that. So my thing, because I mentioned a lot of other people. So you're telling me this does not happen in the state of Maryland?
Telling you what doesn't happen?
That this targeting of urban areas and that we don't have a problem with minority or low-income areas paying higher insurance premiums.
What I'm saying is that no matter what we do, it all has to be actuarially sound. It all has to be demonstrated to the insurance administration that it's not discriminatory.
Okay. Okay. Sorry.
I'm good. Thank you, Mr. Vice Chair.
All right, my apologies. Yeah, clearly the chair came in here and said if anybody else calls me a chair again, we're going to have issues. Next up, Delegate Charcution.
Dang, I'm glad I got the word before I said thank you, Mr. Vice Chair. Thank you. So I have a couple of questions. The first is, there's just a technicality, if you could clarify, Mr. Enton. You said you read off, and I don't have it in front of me, but you read off the piece about preventing discrimination based on a whole host of things. And I believe that list that you read is referencing that you can't cancel or refuse to underwrite or can't renew, can't discriminate in those ways. But does that list also say you can't change the rating system based on things like gender or whatever else was on your list?
No, I think that
we're talking about rates right now. We're not talking about renewing and canceling.
And maybe one of the other witnesses, I was reading from a document.
So the one you read
I can tell you that for the use of Maryland automobile insurance rating. Okay,
but what you read, no, can you just stick to what you read when you were trying to say this isn't a problem? That was,
I think when I looked at it, underwriting is one of the things that has to be non-discriminatory.
Okay.
So we're underwriting you for insurance.
Okay, maybe we'll get into that in the next one where we'll talk about whether gender, I think that's our next bill. So
yes,
I just wanted to clarify that. Okay, so my second question I think is to Mr. Popham, because we've had a chance to talk about this a little, and I think this may get to Delegate Walker's question to some point. I feel like we have this sort of circular conversation whenever we have one of these bills, where the insurance company comes in and says, it can't be discriminatory if the insurance administration allows it to happen. But the insurance administration looks to the legislature to set the rules about what is and isn't okay to happen, except if you can, as an insurance company, and I'm going to ask you to tell me if I have this right, if as an insurance company, you can connect a zip code, education level, a credit score, with the likelihood of somebody filing a claim to recover in the event that they have an accident. Is that correct? If you can connect one of those things, gender, I think we're going to talk about shortly. If you can connect one of those things to the likelihood of what you call loss, which I would call people taking up the reason they have insurance. If you can make that connection, right now in Maryland, it is legal for you to connect that thing that makes it likely people are going to need the service that they've paid for and invested in. That's what you can base your higher rates on. Is that right?
Actually, the term I used, Delegate Charcution, was the propensity for future loss, which is kind of a highfalutin way to say what losses are going to be.
But this is, I think this is where we run into difficulty, because you and I have looked a lot at like data and numbers and connections, yes. and we were getting somewhere until you told me, well, it's a trade secret, so you can't break it down any further for me, making the connection between, I can't remember what it was we were looking at last year, credit scores maybe and breaking.
Well, actually, what we were talking about, just so you remember, is the correlation between credit scores and driving behavior. If you remember, we provided a chart to the committee.
You did, and I had several questions about the chart, and then you never were able to finally answer my questions, because you said, well, it's not just the correlation between credit scores and breaking, because there's a mix of factors in there, but we can't tell you what the mix of factors are because it's a trade secret. So that's where you were not able to really
Delegate Charcution, I apologize, and if you'll give me a chance to make another run at that, I certainly didn't mean to not answer your question.
Okay. Well, so we can
allow it.
Okay, we can do that. I want to get to my question, because my question, I think, is an important one. Are you familiar, Mr. Popham, with the history of redlining in the United States?
I'm generally familiar with it. I know where the term came from.
Okay, so are you familiar with the fact that redlining ended up with the resulting wealth gap that we have, that's the racial wealth gap that we have right now in the United States, and has allowed for a lot of baked in systemic racism in a lot of areas that affect that wealth gap?
I do not profess to be intimately familiar with the history of redlining. I know the term, I know it's been applied. I respectfully submit that it should not be applied to the practice of territorial rating. My understanding of redlining is it was a practice by which some entities, I don't know which ones, identified communities that were somehow less desirable for the provision of some kind of service, whether it was lending or whatever. Territorial rating, I don't think there is a simpler, fairer rating factor than territorial rating. It was the first one, to my knowledge. It's been around for 100 years. It's been checked and rechecked by the person who works for you, the Maryland Insurance Commissioner. So I don't believe it's fair to analogize redlining with territorial rating, respectfully.
So I guess my suggestion then would be for everyone to get a better understanding of how redlining affects not just the home that someone lives in, but it has the effect of doubling down on the racism and the wealth gap, because once you create that wealth gap, when everything else is dependent on anything else that you then add into it that depends on the territory that somebody lives in, is inherently going to double down on the discrimination, whether it's intentional or not. And I'm not suggesting it's intentional on the part of insurance companies, but anyways, I've moved off of my question. Thank you for your answer to my question, and I'll stop there. Thank you, Mr.
I hope we can continue this conversation, Delegate.
Delegate Brooks.
Thank you, Mr. Vice Chair. This can go for any of the unfavorables. Some of the rating factors that I saw were age, driving history, credit score, years of driving experience, location, gender, insurance history, and annual miles. Are these factors equally yoked, or are there certain, say, factors that are more heavily weighed? And secondly, and if so, is that information being provided to the policyholders?
Delegate Brooks, if just for the first part of your question is I mentioned the competitive market that we have, and different companies give different weights to those factors. They all have to be actuarially sound, and they can't be discriminatory, but they give different weights to those factors, and that allows for some competition. Their goal for every insurance company is to make sure that the rate that someone gets is a rate which is actuarially sound, and will that the company will be able to recover through the rates what they're putting out to pay claims. But different companies look at it differently. I remember we had a bill a couple of years ago, and Mr. Hinton from Geico testified and we demonstrated that one company may not use this factor at all. Another company may. One company may give it, a certain amount of weight. Another company will give it a different amount of weight. So the answer is it's up to the company, but no matter what you use, it's all subject to review by the Insurance Administration, and it all has to be actuarially sound.
Delegate Brooks.
Yes.
Delegate Brooks, this is Nancy Egan. I just wanted to add into that.
Nancy, hold on. I think
Sorry,
you asked the question of Bob. Delegate Brooks, did you get the answer you want?
Yeah, I wanted that there was a second part. The second part to that question.
Go ahead.
Mr. Hinton could address that. Whether or not that information is made available to the ratepayers. The policy.
No, I don't think that. I don't think the answer is that the basis for that how much weight they give this factor, how much weight they give that factor, how much weight they give this factor. I don't believe it's available to the MIA, and it's subject to regulation. But I don't believe it's something that's made available to the policy holder. I could be wrong about that, but I don't think that's correct.
Yeah, because I think that's something that could possibly help the policyholder do things to mitigate or reduce the rates. If they knew what those percentages were.
I think the policyholders look at that's why we have 1,600 insurance companies, and the policyholders shop. And I shop. Every year when I get my renewal, I go back to my agent and I ask my agent, I want you to tell me, is this the best rate I can get? And they will come back and they'll send me 6 different quotes from 6 different companies, and I can look at for the same coverage, and I can pick the rate that I want to pick. And I think that's really what happens. I think whether it's you or me or the average citizen, what you want to know is how much is my policy going to cost, and where can I get the best rate for the same coverage?
Thank you, Mr. Vice Chair.
Thank you, Delegate Brooks. Delegate Queen.
Thank you, Mr. Vice Chair. So I have a question around something that the Comptroller from Baltimore City mentioned. So I want to get an understanding of how zip code is used, especially if it relates to accidents. So I'll give you an example, a real example. I live in a zip code in Montgomery County. I work in Baltimore City. A couple of years ago, I left Baltimore City driving to a shopping area, a rainy day, at a stoplight, and I was hit. And we went to pull over to exchange the information, and the driver left. So it was a hit and run for me. The police came, took all the reports, and in the discussion with the police, he says, this happens all the time where you were. Now, what I want to know is, was that accident attributed to the zip code where I live, the zip code where I work, or in that general area where that accident happened? So as Ms. Harden says, and Mr. Poppins said, it's something about the loss. The zip code is attributed to the loss. So I would assume it got attributed to the area where I was. Is that correct? Can somebody tell me, being graded, not the ratio or how it's used, but is zip code used based on where I live, where I work, or where the accident occurs?
believe Delegate Queen, you're correct, that it's where the accident occurred. But if you, the fact that you have a policy and your car, the territory for your car is where you keep it at night, it's called garaging. That could, depending on the circumstances of the accident, that could affect you. So the loss data would be attributable to the location of the accident, but it would also be a factor on your driving record, presumably. I don't know if you were at fault or not, doesn't sound like it. So it may or may not affect your premium.
Okay, so basically, it's where my car is parked at night in my nice zip code in Montgomery County.
For territorial rating, remember, there are a number of different rating factors. Your driving record is a rating factor. Territory is a rating factor. And territory, in your case, would be, as I said, garaging or where you keep your car at night.
So just to follow up, so if I go to renew a policy or anything, would the agent ask me the zip code of where I work?
Well, as Mr. Renton said, there are almost 1,600 insurance companies. I can't speak for all of them, but to my knowledge and my experience, no, they'd ask you where you keep, where you garage your car, where you keep your car, where you live.
Okay. Okay, thank you very much.
Mm-hmm.
Thank you, Delegate Queen. Delegate Harrison?
Thank you. My question goes back again to territory. And I'll stop, ask Mr. Popham because he was the first one to mention it when he first spoke. So are you using the terminology territory to refer to zip code, or and how, if not, then how is that different than the terminology territory that the sponsor is offering?
Territory could be measured in zip code, Delegate Harrison. And let me take this opportunity to thank you for your earlier question, because one of the problems with House Bill 57 is how do you allocate those 5 territories? But to answer your question, when I started in this business nearly 40 years ago, there were 12 or 13 territories in Maryland. Everybody used them. Today, there can be 50, 60, 70. It could be measured in zip codes. It could be measured in other geographic expressions. I don't know. It's all data driven. Insurance companies are increasingly data companies. They are data driven. And territory is the essence of a data driven rating formula.
So just to go back to my earlier example, I am walking distance. My home is walking distance right outside of the Capitol Beltway. The zip code that is on the other side of that street, the other side of that bridge, is subject to the higher rates. So because of my proximity, would that be considered factored into territory? What is it, just zip code? That's I'm trying to make sure that I have a good understanding, because we're using the same terminology to talk about different things. And, you know, for anyone who may be watching, listening, we all want to make sure that we're on the same page, basically.
Well, once again, you're asking a good and pertinent question. I regret that I can't answer that question, but I know who can, and that's the Maryland Insurance Commissioner. You should pose that question to them. I don't know the answer to your question.
Okay, thank you.
All right, last question, then we'll move on. Delegate Watson.
Thank you, Mr. Vice Chair. Question for Ms. Egan. Just in general, all things being equal, which they aren't in insurance rating, but are more dense areas of the state, do they have higher automobile rates than less dense areas because they have more propensity for accidents because the area is denser?
Yes, I think you can, generally speaking, and in my testimony, you can see the less populous areas have less accidents because there's less vehicles in that area driving. So yes, I would say that's correct.
Okay, thank you.
All right, thank you. That concludes the hearing for House Bill 57. Next, we'll move on to House Bill 125. Before we start, just a reminder, can everybody please go back on mute? And then if you have your hand up from a previous question, if you could just lower it. And next up, we have House Bill 125. It's Delegate Shetty. It's very similar to the previous bill. So if you have similar comments or questions, please refer back to the previous testimony. But it is motor vehicle insurance discrimination underwriting policy, use of gender. Delegate Shetty, I know you have slides. Did you want to share your screen?
I would like to in a little bit, if that's okay. I want to do a little bit of the testimony first and then share them towards the end, if that's okay with you, sir.
Yep, go ahead.
Okay, thank you. I should apologize at the get-go that I'm having some technical difficulties, and I actually was in your hearing and heard some of the prior testimony earlier, and was my computer froze and I had to jump off. So thank you, Vice Chair Crosby, members of the Economic Matters Committee. I'm grateful today to have the opportunity to testify in support of my bill. I'm going to have to pull up my testimony, though, in another format because I'm sorry, my computer screen has frozen. Thank you for allowing me the opportunity to testify in support of HB 125, which will help lower the costs for auto insurance for many Marylanders who are currently experiencing discrimination purely on the basis of their gender. HB 125 will prohibit all private passenger motor vehicle insurance from refusing to underwrite, cancel, refuse to renew, rate a risk, or increase the renewal premium of a motor vehicle insurance policy based on the gender of the insured or applicant. So the idea for this bill came from a colleague in another part of the state who, after many years of being insured by the same auto insurer, had experienced no incidents. She signed on to her online account and she realized that they had misgendered her. So not thinking much of it, she changed the gender on her insurance to properly note that she identifies as female, and immediately her premiums went up by several $100s. She was the same person with the same insurance and no other changes other than her gender. Nothing about her actuarial risk actually changed to reflect the need to increase her premiums, and yet they still did. Currently in Maryland, around 14.1% of drivers are driving without insurance, and their costs are passed on to consumers through higher premiums. While the incredibly high cost of insurance impact nearly everyone here in our state, some drivers carry a further burden. The Maryland Insurance Administration allows auto insurance companies to use factors that are unrelated to actuarial risk to profile drivers and rate their risk and premiums according to what they deem is proprietary information, as you've just heard in the prior bill. They are allowed to use credit score, occupation, education, housing status, gender, and marital status to underwrite a plan. It's unclear what these have to do with an individual's ability to drive without incident. However, what is clear is that lower income, drivers of color, and women are disproportionately negatively impacted based on this system. Many of Maryland's top insurers, most of whom also operate in states that legally ban gender discrimination in auto insurance rating, utilize gender as a primary factor in setting auto insurance premiums here in the state. Allowing them to do so disproportionately harms all women, but especially women of color, further deepening the financial inequality that they are already facing. In your bill file, you will find a report provided by the Maryland Consumer Rights Coalition that analyzed recent data acquired by the Consumer Federation of America from Quadrant Information Services that includes auto insurance premiums in every Maryland zip code from 10 of the largest insurance carriers in the state, representing 90% of the market. The premiums reflect the state's mandatory minimum coverage for a driver with perfect driving history, no accidents, no tickets, or claims on their record. Consistently, the findings of this report have shown that women are paying higher rates for auto insurance across the entire state of Maryland. All but 2 of the carriers studied used gender as a primary factor in assessing the rate. And the price difference between genders of the model driver with a perfect driving record varied anywhere from $8 to $150 annually, with Progressive holding the most egregious difference. Notably, in the two that do not utilize gender as a factor, the price difference was $0, and they happen to be among the lowest cost options in the state. One of them actually happens to be State Farm, so I was a little bit surprised to see them on the opposing panel here today, and I think I have some sense of why. I'm happy to share. Looking at the cost of premiums across jurisdictions, the report shows that women in Baltimore City are experiencing the worst rate discrimination, and model female drivers there are paying $67.71 more than their male peers. Auto insurers will claim that women pay more because their actuarial models show that we need to. According to them, we are riskier drivers than our male peers. However, the inconsistent use of gender as a primary rating tool across all of the insurers in Maryland shows that it is not, in fact, predictive of risk. Furthermore, our transgender neighbors in Maryland are also experiencing the same discrimination. A trans woman who contacts her insurer with her preferred gender identity and name change should not be penalized when nothing about her actuarial risk as a driver has changed other than her gender identity. Last, most of the companies that were reviewed in this report operate in other states, including in the 6 states where the use of gender in rating is banned: California, Hawaii, Massachusetts, Michigan, North Carolina, and Pennsylvania all refuse to allow auto insurers to discriminate on the basis of gender. This prohibition has not adversely impacted the market in those states, nor has it resulted in the inability to operate, as my opponents will surely claim. So now I'd like to take a quick moment to show some slides if my screen, if I may be allowed, sir. Let me take a break.
Okay. I think you have permission to share.
I just got a note that said participant screen sharing is disabled.
I made you a co-host, delegate. Let me.
Could you? So you may have when I first entered, but then I had to drop
Oh,
off.
got you. Okay.
I'm so
All
sorry
right.
for the difficulty.
No, you're fine. It should be good now.
Okay, thank you very much. Perfect.
You're
I really
welcome.
appreciate this. Thank you. Let me see. Give me one moment, please. So sorry. My, as I mentioned, my computer screen is frozen. So I might have to follow up with these slides, but they are actually in your, they're in your testimony, except we sort of ordered some of the tables and charts a little bit differently to highlight specific notes. So if I'm unable to share it, I will email it to the committee members subsequently, if that's okay. Looks like I might be unable.
That's fine, Delegate Chetty. So what
Okay,
we'll do,
my apologies. So on the slides that I had put together, and I'll email to you shortly, I just wanted to show you the depth of this issue that women are facing across the state in each of your districts. So as I mentioned, this data was compiled by the Consumer Federation of America. Their report is located in your bill file today. So the first slide that I will email you shows that the price difference that model women drivers are paying compared to their male counterparts. So you'd see that Baltimore City actually really leads on this, with women paying on average over $67 more than men. But this issue is not located or isolated to the city. It's prevalent across every jurisdiction across the state. The second and third slide in the packet I'll send are tables that compare those same numbers. So a couple of things I want to note about it. The data this is data about the average cost of premiums by gender across Maryland by county for the minimum legally required coverage in the state for a 35-year-old model driver, no tickets, no accidents or claims on their record. The only difference is the gender that they identify with, and we ranked these in the column by the price difference between genders. So it goes from the highest to the lowest. So on the table that you'll receive, Baltimore City is actually at the top. It's almost double the second highest difference, which is Baltimore County. So I also want to note that the city has the highest rates of insurance in general. So women there are actually paying the most in the entire state of Maryland. The yellow highlighted fields on the table that I'll email actually is just the jurisdictions that are represented by members of this committee. I just thought it would be easier for you to be able to identify where you are in the list and how how bad this problem really is in your jurisdiction. And the last slide I found especially informative, and what it shows is that the use of gender as a rate factor by Maryland's top 10 insurers that cover 90% of the market combined. So we organized that slide a little bit differently. It's by average insurance premium paid from highest to lowest, and it denotes whether or not the company uses gender as a rate factor. So you'll actually see that the two insurers that do not use it, when the insured is over the age of 30. And again, this demonstrates data for model 35-year-old drivers. So the two that don't use it are State Farm and USAA, and they actually offer among the lowest average premiums in the state. So any feedback that's offered by the opposition that claims that gender is allowed because there's an actuarial need, or that it's used to really drive down prices for all, is patently false on its face, when you can see that these companies that aren't even using it offer some of the lowest premiums, and in some instances, premiums that are half the cost of insurers like Geico, which is the highest in the state, and they do utilize gender. So thank you so much for colleagues for sticking with me. I apologize for my tech issues, and I'd be delighted to answer any questions. Thank you.
Thank you, Delegate Shetty. I'm going to let two other people testify, and then we'll take the questions, so that way nobody's left on their own. A reminder to everybody with favorable testimony that you do not have to repeat some of the previous testimony you said before you. So with that, Christopher Dews.
Talmud, it appears we have lost Brian Cosby. Do you want to take over?
I keep going in and out also on both video and audio.
We be patient. I'm sure he'll be right back.
Yeah, I'm sure he will.
Is it protocol that the minority party takes over when the vice chair goes out, or?
Definitely not.
I know you would like that, wouldn't you? Good try, Pippi.
I think usually Delegate Branch takes over.
Yeah, I can't even see the witnesses. I don't see anything. So I'm just like you guys.
Except you're the whip.
Yeah. I wonder where the vice chair is.
I'm back.
Yeah.
Gotta love the internet. The MGA. Okay. I apologize. Did Mr. Dews go?
Nope.
Okay. He went. How about Michelle Siri?
Yes, hi, good afternoon, Mr. Vice Chair, members of the Economic Matters Committee. Thank you so much for having me. My name is Michelle Siri. I'm the Executive Director of the Women's Law Center of Maryland. As you may know, we're a statewide legal and advocacy organization dedicated to ensuring the physical safety, economic security, and bodily autonomy of women, here in support of HB 125. So you've already heard about all the ways that car insurance rate calculations can be discriminatory, can have a negative impact. I'm just here today to kind of put the conversation in the context of the economic hardships faced by women in our state. Not surprisingly, pandemic has had a disproportionately negative effect on women and women of color in particular. Since the pandemic, women have accounted for 53% of the jobs lost within the US economy, despite not making up nearly that much of the job workforce. They're also twice as likely to have significantly less savings now than before the pandemic. And that economic hardship is compounded by the persistence of the gender pay gap, which still exists, I'm sorry to say, and still puts Maryland at 7th from the bottom nationally when it comes to supporting Latina workers. So for the typical female worker, the pay gap adds up to over $10,000 over the course of a year and roughly $500,000 over a lifetime. So piling onto this is a phenomenon known as the pink tax, where women pay a premium for items marketed to them 42% of the time. Over the course of the year, that pink tax adds up to $1,300 or $80,000 over a lifetime. And vehicle ownership is not immune to the pink tax. Women pay over $115 more than men when buying cars. They pay over $20 more each time they get their car serviced. And as you'll hear, they are 39% more, they pay 39% more than men on their annual insurance premium, or up to $154 more annually. It means over the course of a lifetime of a car, economists estimate that women pay up to $7,800 more than men do. That has to stop. When 2/3 of Maryland Maryland families are the co-primary or sole breadwinner, it's a significant burden on an already overburdened portion of our society. So HB 125 is an opportunity to make a real difference. And for those reasons, the WLC asks for a favorable report.
Thank you. And I apologize, Mr. Dews. I think I got a little bit lost in translation there as I was trying to get back on. I understand that you didn't testify. So next we'll go to Chris Dews, and then I will take Delegate Watson's question. Mr. Dews, are you there?
Mr. Vice Chair, I don't see him in.
Yep, I don't see him in here either. That's okay. Delegate Watson.
Thank you, Mr. Vice Chair. Delegate Shelley, I am interested in learning more about the study that you referenced. It is not in my file, and your testimony is not either. It's just written as oral testimony. So is it possible to send that to us or something, or maybe the committee can do it? I don't know, but I don't have any reference to what you were talking about. Can you tell me?
Apologies. Yeah, I did. I thought we had submitted written testimony as well before the deadline.
That's okay. We can get it. I just need to know, what study were you referring to?
Yes, thank you. So the Maryland Consumer Rights Coalition, who is going to be testifying in favor as well, they submitted testimony in writing, I believe, that includes the study that I was referencing, which had data from the Consumer Federation of America on the auto insurance rates of 90% of the market here in Maryland.
Okay, and do you know what year that study was done?
I think they just released the data recently, but I believe it might have been in 2018. But I think Isadora on the panel can share the specific.
Okay. And the woman that you referred to that was your constituent that had the issue when she went and changed her gender, did she by any chance, do you know if she filed a complaint with the insurance commissioner to see if anything was amiss?
I do not believe she did, but I don't know for sure, and I can check.
Okay.
Thank you.
I've been an insurance agent for 30 plus years, and it's always been my experience that at least for youthful operators, I would say up to the age of 30, it is less expensive for women. And the data that I've read from other reports, even for older women, I have seen that it has been less expensive for women. So I just really want to drill down on the data and to make sure that we're looking at accurate information. And that last question would be, did you talk to the insurance commissioner's office about this bill or this data or this concern before now?
I think we may have reached out, but I don't know that we were able to set up a time in advance of the hearing.
Okay, well, we can talk about it further. That's my interest in making sure we have this data.
Yes, and I'm happy to, if the study was not included, I'm happy to email it to the committee. And I believe that the slides I was referencing might have already been emailed to your inboxes as well.
Perfect, thank you.
Thank you.
Thank you, Delegate Watson. Just in case we have any other technical difficulty, I'm going to read off the next three names and then I'll call the next witness. So next we'll have Fran Schneiderman, then Isadora Stern, then Michael DeLong. So Mr. Schneiderman.
Thank you. I'm Fran Schneiderman with Consumer Auto, where we work for safety and fairness and transparency for Maryland drivers. We support this reform because the way gender is being used now seems to unfairly raise the cost of insurance for many Maryland women, and actually for some men as well. Some insurance companies seem to charge men more than women. And because women make less money than men, of course, this is another case where the use of non-driving factors hurts people who have difficulty paying for insurance in the first place. Because the gap is largest in Baltimore City, where insurance is most expensive and most difficult for people to afford. There's a lot of people struggle with low incomes in the city. Again, that's another reason to be concerned about affordability here. Just quickly, I think it's particularly troubling to use basic physical characteristics, gender, as a basis for this kind of discrimination. We don't allow the use of race, and we don't allow some other factors because we think it's unfair to discriminate on the basis of these physical characteristics. Now, in many cases, women do pay pink taxes, as Michelle Siri noted. I would note that what's unique about this situation is that it's a product that the state more or less mandates that people purchase. So in that case, I think the state has a special obligation to make sure that women and everyone is not subject to unfair discrimination or unduly burdensome pricing. As I said, we prohibit the use of race and income and other factors that we regard as simply unfair and imposing an unfair burden on people. I think rates should be based on your driving record and your record and your driving practices, much more than on these other things that have kind of weak links to actual safety on the road. So hope you'll give a favorable report to the bill and protect women against this kind of rate discrimination in insurance.
Thank you, Mr. Schneiderman. Next, we'll go to Isadora Stern.
Hi, yes, this is Isadora Stern with the Maryland Consumer Rights Coalition. MCRC, as I said in the last bill hearing, is a statewide organization that advances economic inclusion and equity through research, education, direct service, and advocacy. And we are here in support of HB 125. Thank you, Delegate Shetty, for sponsoring this legislation and for the excellent introduction. As the sponsor said, our report, which was released this week, so the data is very current, women are being charged more for insurance than their male counterparts in every county in Maryland. While women are charged more for insurance overall, some insurers, as Delegate Watson just pointed out, charge men more, and still others don't even use this factor. This inconsistent use shows us that the ability of gender to predict driving ability is deeply flawed. It is more likely that gender is a better indicator of income and how likely a person is to file a claim, costing the insurance companies money to cover. Higher income drivers are more likely to cover damages out of pocket than file and risk a multi-year increase in their premiums. Men are statistically higher income earners. While insurers are prohibited from using income as a rate factor, they benefit from using proxies like gender to attract higher income earners with lower premiums, which are subsidized by the higher premiums of lower income earners. Gender is a flawed predictor, and insurers are prohibited from discriminating based on sex without actuarially sound evidence. Insurers will tell you that removing this factor will have a devastating impact on the market. However, Maryland's top insurers continue to operate in states that have already eliminated gender. The bottom line is that a person's ability to attain a state-mandated insurance free from discrimination should not be considered with the same import as an insurance company's ability to make money. Thank you, and I urge a favorable report.
Thank you. Next, we'll go to Michael DeLong, but before that, Tanea Moore, you will follow him. So, Michael DeLong.
Thank you very much. My name is Michael DeLong, here on behalf of Consumer Federation of America, an association of consumer nonprofits. We strongly support HB 125, which would ban auto insurance companies from rating or underwriting auto insurance based on someone's gender. Maryland currently requires all drivers to purchase auto insurance, and so the legislature has a special responsibility to ensure that it's affordable and that insurers don't unfairly discriminate against folks. Consumers think that auto insurance costs should be based on their driving record, but numerous insurers use gender to charge people, mostly women, higher premiums. In fall 2020, we acquired auto insurance premium data from Quadrant Information Services for premiums charged by the 10 largest auto insurers for every zip code across the United States. We analyzed this for Maryland, found that on average, a 35-year-old male driver pays an average premium of $1,099. But a 35-year-old female driver with the exact same driving record and everything held constant pays an average premium of $1,124. Several of Maryland's biggest auto insurers charge women significantly higher premiums. Delegate Charcution went over them very capably, and we thank her for her work on this bill. But the result is that women are getting charged unfairly for driving simply because of their gender. Progressive and Geico are the worst offenders. The harmful discrimination occurs across Maryland. As Delegate Charcution noted, we found that the largest differences occur in Baltimore City. And auto insurers claim that considering gender is a good way and that it's actuarially sound, but different companies in Maryland weigh it in different ways. Most insurers charge women more, but a couple do not, and a couple do not use gender at all. And also 6 states, California, Hawaii, Massachusetts, Michigan, North Carolina, and Pennsylvania already prohibit gender discrimination in auto insurance, and the markets function perfectly well there. So we urge a favorable report on this bill. We are happy to answer any questions about our study or data or anything else. Thank you.
Thank you. Next up, Ms. Moore.
Thank you, Mr. Vice Chair, members of the committee. Thank you for the opportunity to support House Bill 125. Again, my name is Tanea Moore, and I'm the policy manager with the Cash Campaign of Maryland. Cash is a nonprofit that promotes economic advancement for low to moderate income Marylanders. This bill limits insurance companies' ability to adjust auto insurance rates based on the gender of the insured or applicant. The cost of car insurance is a significant barrier to people being able to afford reliable personal transportation. Unfair insurance writing practices puts a greater financial burden on women obtaining car insurance. This barrier lowers access to reliable transportation, which limits job opportunities and access to medical treatment, childcare, food, and other essentials. For example, the Brookings Institute has an article that examined how women experience extremely high unemployment rates as the pandemic shut down many restaurants and hospitality jobs. These jobs and other opportunities are returning to the market, and we have the opportunity to increase women's access to personal transportation. Data also shows how the unaffordability of Maryland's auto insurance has created a population of Marylanders who cannot afford to drive insured. The use of non-driving related factors, such as gender, is one of the main reasons. In my written testimony, I referenced MCRC's report, Taking the Low Road, where they documented the use of sex and marital status as a rate to set auto insurance rates. One of the study findings shows how Progressive, an insurance company, increased its rate by 39% when the model driver was a woman. Again, this bill is important because it reduces discriminatory practices in establishing rates by prohibiting insurance companies from using gender to establish rates. Thank you. Thank you so much. And for these reasons, we urge a favorable report.
Thank you. And I don't see any questions from any of the delegates. So if they do, they can put their hands up, but we're going to move over to the red corner, and then the unfavorable will start with Marta Harding.
Thank you, Mr. Chairman. On behalf of State Farm, in opposition to House Bill 125. State Farm opposes House Bill 125 because gender is a predictive factor in the establishment of rates to match price to risk. Current Maryland law prohibits insurers from using any rating factor that unfairly discriminates between insureds having like risk characteristics and gives the Maryland Insurance Administration the responsibility to review insurers' rates to ensure that they do not violate this fundamental principle. Although you've heard today that this legislation is going to lower rates for female drivers, the exact opposite would be the impact of the bill for State Farm. Passage of this bill would actually increase the rates for State Farm's insureds who are younger women and decrease the rates for younger men who have demonstrably higher loss experience. Put another way, younger women will subsidize the, on the whole, poor driving habits of the younger male population. as you've heard, different insurers use gender in different ways. Some don't use it at all. Some use it. Obviously, State Farm they're the largest auto insurer in the country. I think they're the second largest in Maryland. If somebody is dissatisfied with the way their particular insurer is using gender and believes they can get better rates elsewhere, they should absolutely shop around because there's a lot of variation. This is the nature of competition. We're in an intensely competitive auto insurance market, and there are a lot of alternatives out there for women to shop around. So for those reasons, I would ask for an unfavorable report. Thank you very much.
Thank you, Ms. Harding. The next three witnesses are Nancy Egan, Robert Enton, and Matt Overturf. So with that, Ms. Egan. You do not see Nancy in the, oh. I don't see her over there. Okay.
There I am. I apologize.
Sorry.
Once again, it's Nancy Egan with the American Property Casualty Insurance Association in opposition to this bill, which would ban the use of gender. Once again, I would like to say that the Maryland Insurance Administration oversees our rates to make sure that they are not unfairly discriminatory. Actuarial data has continued to prove that young men just beginning to drive are higher risk than their female counterparts. And this risk increased to some extent as men get older. They tend to be more likely to engage in risky driving behaviors, including not using seatbelts and driving while impaired. Each company has different results, which can, as you've already heard, can have different rates. So I'd like to draw your attention to the Maryland Insurance Administration rating guide. This offers 22 various rating scenarios using 10 zip codes across the state, and they have 60 companies providing rates for different rating scenarios. I will give you the results of a 19-year-old male for a 2014 Honda Accord, 30, 60, 20 rates. For zip code 21502 in Allegheny County, the rates range from a high of $17,370 to a low of $2,165. 20906 Montgomery County, $22,000 or to $22,038. Go to a young female, minimum rates, full coverage. Zip code 21502, high of $11,972, low of $1,854. I can go on and show that rates vary across all 60 of these companies that are on display in this rating territory. I urge you to go to the MIA and their website and look at these. Oops, I have it upside down. Their rating scenarios that are located on their website. Thank you, and we are in opposition to the bill.
Thank you, Ms. Egan. Robert Enton.
Thank you very much, Mr. Vice Chairman, members of the committee. Robert Enton on behalf of the American Property Casualty Insurers Association. I know that every member of the committee has access to the fiscal note for the bill. If you look at the fiscal note on page 2, you will see that MAIF, which does business in every county in the state, advises that it uses gender as a rating factor. Under the bill, on average, annual premiums for 90% of MAIF insureds would increase by 5% or decrease by 5%. The most significant impact would be for single females younger than 30 with an annual premium increase of approximately 37%. And single males younger than age 25 with an annual premium decrease of 20%. If you look at the chart, which was mentioned, I remember this, that's what I was thinking of previously when I testified, this document from the Consumer Rights Coalition. It compares the premiums, annual premiums of 10 companies. 2 of the 10 do not use gender at all. The third lowest of the 10, Erie Insurance, their annual premium is $916, and they do use it. So once again, the weight that's given is different for every company. The key is that consumers have to shop, and if consumers shop, that's how they get the best premium. If you're a woman and you shop, there's nothing that prohibits you from buying a policy from one of the companies with the lowest premium. So I think that's really the key. And we would ask the committee to give this bill an unfavorable report. I just don't think it does what it will do what the proponents think it will do.
Thank you, Mr. Hinton. And our last witness is Matt Overturf.
Thank you, Mr. Vice Chair, members of the committee. Matt Overturf again with the National Association of Mutual Insurance Companies. I'm also speaking on behalf of our state trade partner, the Maryland Association of Mutual Insurance Companies. Collectively, we request an unfavorable report on House Bill 125, as it would significantly alter the existing risk-based pricing system. Risk-based pricing makes it possible for insurers to offer customers competitive rates while remaining financially stable. The use of gender as a factor in today's auto insurance provides a good example. While insurers consider a number of factors like driving history, vehicle information, vehicle safety equipment, and miles driven, they also use data such as gender to determine potential correlation with risk. Data from the U.S. Department of Transportation shows that as a group, younger males may be more likely to engage in riskier driving behavior and/or they are more likely to be involved in a greater number of accidents. Consumers benefit greatly from today's risk-based pricing. In the highly competitive insurance marketplace, insurers compete for potential policyholders by offering lower rates and better coverage than their competitors. Each insurer uses its own risk-based pricing rating techniques that often result in different prices for the same consumer. I appreciate the opportunity to appear before the committee today and request an unfavorable report on House Bill 125. Thank you.
Thank you, Delegate Watson.
Thank you, Mr. Vice Chair. I'd like to ask the representative from the Maryland Consumer Rights Coalition a couple of questions, and also to the sponsor of the bill. Your testimony was included further down. It looks like it was put in twice, so I do have it. So thank you for that. Who is our representative from?
Hi, Delegate. This is Isadora from the Maryland.
Isadora. Okay, thank you. I just want to make sure I have this right, because clearly we want to be sure we're talking about the same thing. I am looking at your testimony, which shows table 1 is a chart of 10 insurance companies. I think within the state of Maryland, we have about 130 to 150 that provide automobile insurance. You are saying that these are the top 10. And in that chart, what I see are 5 where your data shows, 5 out of the 10 where your data shows higher premium for females. Is that correct?
That's correct. This is the top 10 or over 90% of the market.
Okay. So yeah. 50% of 90% of the market is showing premium higher for females.
That is correct.
Okay. So your point is not, and correct me if I'm wrong, but your point is not that females are always being overcharged by all the insurance companies in Maryland. Your point is that females sometimes pay higher than males, and males sometimes pay higher than females, depending on each insurance company's formula for rating.
Yes, overall, with an average, women are being charged more across the market. This shows that there's an inconsistency. If this factor was a true predictor of driving ability, then insurers would benefit from rating this factor consistently for men and women, no matter where they're rating in Maryland.
So I don't know if you're aware of this, but I think that if maybe through the sponsor, if you went to the insurance commissioner's office, they could actually do a study on the factors to be able to either confirm or dispute the data that you're coming up with for the 10 carriers. And I think as a member of the committee, that's something certainly I would be interested in seeing to determine whether or not this data is representative of the reality out there. From what you're telling me right now, what I'm seeing here, I do not see, I don't see evidence that the majority of women are paying more for their insurance based on their gender.
May I interject here? I'm wondering if there might be a discrepancy between the chart that I had on the slides that were emailed to you and the chart that Isadora is referencing, or that Delegate Watson might be speaking about. The one that I had showed that women were paying the highest amount in the top 10 insured, in the top 10 insurance, and that they represent 90% of the current insured market.
There are 10 listed on here, Delegate Shetty, and 5 of the 10 show higher rates for women. But I have not seen your.
I would like to say that it shows that there are 5 that charge women more, and there are a few that actually are charging men more. But the difference between the cost for men and women is different. So if men are being charged more in an auto insurance by an insurer, the average is only $33 more than women. But the insurers that are charging women more, the average is $71 more. So they're.
And I think, Ms. Stern, I think that one of your, the data point for Progressive really skews that. And I would really want to drill down with Progressive, because that is a tremendous difference. And we should look into why that is with Progressive for women versus men. But I think that data point skews what the point you're just trying to make. It looks like it's between 1% and 8% among all of the differences between men and women, except for the Progressive, which seems to be more. We don't have to go into it more now, but I'd be happy to work with you guys offline to sort of make sure that the data that we have is actually representative of what's happening out there, so we can make well-informed decisions.
Thank you, Delegate. We would welcome that support. Thank you.
Thank you, Delegate Charcution.
Thank you, Mr. Vice Chair. My question is for Mr. Overturf. You mentioned risk-based pricing, and this is this question that I've been trying to get at. I want to make sure that we're clear. Risk means the risk that somebody will actually file a claim and get money from the insurance company to pay for whatever they need. Is that right? As opposed to the risk that they'll get into an accident.
I believe the risk would be both, right? I mean, it would be both
Well,
for the individual.
risk of getting into an accident would affect the likelihood of filing a claim, but one could get into an accident and not file a claim. So some of what when you're making this actuarial connection, the connection is, are they likely to take money back from the insurance company that they've been paying into? Is that right? That's what the that's when you say it's a risk-based pricing, that's what it has to be tied to be considered sort of not discriminatory in your mind.
I believe so, yes.
Okay. So then it's entirely possible that part of what is affecting that is actual driving behavior. And that would explain why in the cases where folks are saying maybe younger men, I don't know this independently, but if younger men are more likely to get into an accident, and that would affect the likelihood of getting into an accident and getting the funds. But the other thing that would be affecting that would be wealth gap issues. So if women are more likely to need to access the insurance they've been paying into, they're more likely to try to get those funds when they need it, and therefore they're more likely to show up as a risk-based factor because there's the wealth gap and they need that money to pay for the car repair. They don't have the funds in their bank account to just do it on their own. Is that right? Could that be the case of what's happening?
I can't speak to the wealth piece of it. I mean, income would not be something that would be part of that factor. So it wouldn't be necessarily whether or not you could afford it. It would just be whether or not
you're likely
need
to
access.
So we know we have independent information in this country about things that affect the wealth gap. So I don't need you to confirm those pieces. I'm just saying, like, is it that if people are more likely to access to file that claim, then they're more likely to be charged a higher amount? That's what risk-based pricing is, right?
Sure.
Okay, thank you.
All right, thank you. And thank you, Delegate Shetty. This concludes the hearing for House Bill 125. We're now going to go on to House Bill 138. Again, a reminder, if everybody could please hit mute. And on this, we have Delegate Charcutions, and then we have 3 witnesses following her: Reagan Vaughn, Tanea Moore, and Lydie Garcia. I apologize if I mispronounced that. So with that, we'll start with Delegate Charcution, the bill sponsor.
Thank you, Mr. Vice Chair. Colleagues, it's good to be here to be asking for your favorable report on House Bill 138. For the record, Delegate Lord Charcution. And this bill affects energy assistance, specifically Electric Universal Energy Service Program. So you may recall last year when we were having extensive conversation about HB 606, there was discussion about how do we make sure that people who need energy assistance can get energy assistance. And we discussed two different programs. So there's the LIHEAP money, which is federal money that comes into the state and is distributed through the program called MEAP, Maryland Energy Assistance Program. And then there's EUSP, which is a state program for which the state sets the eligibility requirements. And that is also, and it's funded by ratepayer surcharge on your bill. And it's also funded by RGGI money that comes into the state through the Regional Greenhouse Gas Initiative. So last year in our conversation, you might recall that there was this discussion that while there are two different programs with two different funding sources, and the Maryland law is very clear about what one needs to be eligible for EUSP, and what one needs to be eligible for EUSP is an income below 175% of the poverty, or for customers at least 67 years old, an income below 200% of federal poverty. What we discovered was that the Department of Human Services was using the LIHEAP criteria, the MEAP, the federal money criteria, to restrict Maryland residents who should be eligible for EUSP because DHS chose to use the federal criteria for Maryland residents. They were, in essence, restricting Maryland residents from accessing funds that we in statute had established to be available for everybody. So you may recall the conversation. And as a result of it, then Chairman Derek Davis sent a letter to the Secretary of Human Services, and the letter is included in my testimony, asking her to change the process, asking her to establish it so that if a Maryland resident is eligible for both the federal program and the state program, they apply and they get both. But if a Maryland resident is eligible for just the state program, they apply, they get the state program, and the lack of eligibility for the federal program doesn't restrict their access. The Secretary wrote back to Chairman Davis in June and said, thanks for the feedback, and we'll take a look at it in our OHEP work group. That work group met a few times over the last few months and has not picked up or taken on this task. So I'm here to close the loop and to put into statute a requirement that the Department of Human Services shall authorize benefits under EUSP for electric company who does not also meet the eligibility requirements for the federal program. So this will ensure that all of our Maryland residents who meet these income eligibility requirements, who are suffering and trying to pay their utility bills, will have access to the funds as was intended 20 some years ago when this legislation was first written. I will just add that BG&E and PEPCO both support this bill, and BG&E is favorable with amendments in writing. I don't think they're here in person. I've taken a look at their amendments. I considered a clarifying and friendly amendment, and so I have requested that amendment, and we should have that by the time we're ready to vote on the bill. So with that, I'll pass it on to the rest of my panel, and happy to take questions when we get through.
Ms. Vaughn, Reagan Vaughn.
Thank you, Mr. Vice Chair and members of the committee. My name is Reagan Vaughn. I'm the Director of Advocacy at Catholic Charities of Baltimore, and here today in support of HB 138. As was explained, it would separate the eligibility determination for EUSP and MEAP, our two energy programs in Maryland. In addition to sharing Catholic Charities support, I also want to bring to your attention the written testimony of two statewide coalitions, the Marylanders Against Poverty and Welfare Advocates, who both have submitted written testimony. For over a decade, I've worked with stakeholders in the department on trying to make the application process for public benefits more efficient. There have been work groups, task force meetings, we've had legislation in, there was budget language last year, and it's just not a simple proposition. because the more we try to streamline applications, the more we find that there are unintended consequences. And that seems to be what's happened with our energy assistance programs. Currently, if you want to apply for energy assistance, you have to apply for both MEEP and EOSP at the same time. And when the department makes the eligibility decisions, they're using those more stringent MEEP requirements. And that means that Maryland ratepayers are literally being left in the cold and the dark because they don't meet those more stringent requirements. So while this may be more administratively efficient, it's not equitable and it doesn't follow the statute that was established by this legislature, and I'd even venture to say this committee 20 years ago, which set very broad eligibility criteria. A person has to be an electric customer and meet the income limits. So we would urge a favorable report on HB 138 so that anyone who is eligible under the statute is actually able to access the benefits that are there for them. Thank you.
Thank you. Next, Ms. Tanea Moore.
Thank you, Mr. Vice Chair, members of the committee. Again, my name is Tanea Moore. I'm the policy manager with CASH here in support of House Bill 138. Currently, people must apply for energy assistance using one application. This application uses federal requirements, as we discussed earlier, which excludes many households from the state energy assistance programs that they actually contribute to. All Maryland utility accounts pay into EUSP. However, not all Maryland utility account holders can access those funds if needed. COVID-19 created a significant need for assistance for many low-income households across Maryland, and some families have been left out of receiving a lot of the assistance made available. The global pandemic lowered many families' capability to cover their electricity costs in numerous ways, and I have highlighted some of those ways in my written testimony. And I'll just wrap it up by saying that not having access to electricity and energy assistance will leave many families without access to many essentials, such as heat and AC, safe food, medical equipment, and many other reasons. Just some of the stuff that I said earlier is some of the reasons why it's important to allow all Maryland households, including immigrant households, the ability to apply and receive assistance during times of need. Ultimately, this bill ensures that all Maryland households will receive energy assistance. And for these reasons, we urge a favorable report. Thank you.
Thank you. Ms. Garcia.
Yes, thank you. Thank you, members of the committee. My name is Lady Garcia. I'm the manager of the Health and Social Services Department at CASA. On behalf of CASA and its more than 122,000 Black and Brown immigrant members residing in Maryland, we're in full support of HB 138 as it opens eligibility to immigrant Marylanders who are in most need of the Electric Universal Service Program and who otherwise meet all other criteria. For over 10 years, CASA has provided services to our members to assist them in navigating public benefits. Every year, we serve hundreds of families that come to us for support because they cannot afford their utility bills. Every day, I meet with families who go into drastic debt and have taken out payday loans with high interest rates to keep their heat on. And for many families at CASA, that is not even an option because of their immigration status doesn't allow them to obtain any credit line, leaving families without heat in the middle of winter. Despite undocumented immigrants paying millions of dollars in taxes every year in their deep contribution to the state in other ways, they're not eligible for ESP. They should be. The federal requirements for the Social Security number doesn't have to be the requirement for Maryland. No family should ever have to choose between putting food on the table or keeping the lights on. The eligibility requirement is not only harming immigrants without status, but their U.S. citizen children and family members. The pandemic has only highlighted the level of crisis that families are facing without access to utility services. We strongly support House Bill 138 and urge for a vote report. Thank you, Delegate Charcution, for your leadership in this critical bill.
Thank you so much. And I don't see any questions. That concludes the testimony on House Bill 138 and concludes the bill hearings for today. So thank you all. And I think the next time we meet is on the 25th. Have a great afternoon.